Londra'dan herkese merhaba. Bugün uzun yıllar uluslararası enerji piyasalarını takip eden bir petrol piyasası uzmanıyla buluşuyoruz. Uluslararası Enerji Ajansı'nda petrol endüstrisi ve piyasaları direktörü olarak da görev yapmış. 40 yılı aşkın süredir bu piyasanın içinde olan bir isim Neil Atkinson bugün bizimle birlikte. Mr. Atkinson, thanks for joining our program.
Thank you for having me.
First of all, you have been following oil markets for more than 40 years, as far as I know. How does this period compare with previous crises? I mean, is it closer to the oil shocks of 1970s, or are we seeing something completely unique today?
Well, back in the 1970s, the first oil shock of the modern era was in 1973-74 after the Yom Kippur War. And at that time, the global economy was far more dependent on oil in certain sectors than it is today. For example, back then, oil was used a lot in power generation. Today, it isn't. And we used a lot more oil per unit of GDP back then than we do now. And the oil shock of 73, 74 was a big shock, no question about it. And it led to a major recession in the middle of the 1970s. But so if we fast forward to today, the shock is, I think, unique because we have never before seen the de facto closure of the world's most important strategic pathway for oil to come from the Middle East to the global market. That is the Strait of Hormuz. That has never happened before. And this is what is unique about today's crisis. The impact in terms of the volume of lost barrels to the oil market, which we're currently seeing, we've never seen that before. So this is a unique situation. And I would suggest that unless something changes and the situation is resolved one way or another, this global oil supply crisis could be the most important and the most dangerous we've ever seen.
I mean, everybody's talking about Strait of Hürmüz nowadays. We know that one third of oil passes through the strait, and we know that it is not officially closed, but nobody can pass through the strait now. Is there a less discussed but important risk about Hürmüz that you would like to underline? Because we are trying to understand the risk of Hürmüz in terms of oil markets.
Well, the risk is, as far as oil markets is concerned, is that, as you were suggesting, anywhere between 15 to 20 million barrels of crude oil and products passes through the strait every single day to go to global markets. The majority of it these days goes to Asia, but some also goes to the United States and also goes to Europe. And, that is the impact as far as oil markets is concerned, because unless the strait is reopened to traffic, the producers of oil around the Gulf of, around the Middle Eastern Gulf, Saudi Arabia, UAE, Kuwait, Qatar, others I've probably forgotten, they will have to shut in their production because they will not be able to store oil that is produced, and there is no outlet by ship. So the implications for oil are very clear. The same is also true for liquefied natural gas. Qatar is the world's biggest exporter, and it too is not able to send its liquefied natural gas ships through the strait. But it isn't just oil and gas. And so again, related to the oil industry, you have the problems in exporting fertilizers and other specialty goods or products which are made by the oil industry. And fertilizers are very important for the global agricultural industry. They cannot get through the strait either. And there's lots of other goods that are transited through the strait on a daily basis, not necessarily related to oil and gas, but they're important to the global economy. So we cannot really overstate how important this de facto closure of the Strait of Hormuz is, and the damage that will happen to the global economy very soon unless there is a resolution.
So how high could oil realistically go if Strait of Hürmüz stays disrupted for several weeks?
Well, we're now getting into the realms of educated guesswork. Now, the reference I've been making when I've been talking about this in the last couple of days is that in the middle of 2008, oil prices rose to very nearly $150 a barrel. And the reason for that back then was that there was a very strong demand growth for oil from China and other developing countries in Asia and elsewhere in the world, strong demand growth. And back then, there was very little spare oil production capacity. So it only took a relatively minor interruption to global oil supplies, and back then Nigeria was a source of difficulties in supply. It only took a minor disruption to help send the oil price up very high. So my point is, we managed to get to $150 back in 2008 without there being the kind of supply disruption that we're actually looking at today. So yesterday, Monday of this week, we saw oil prices reach $120 a barrel. President Trump later in the day made statements in American media which suggested that the war could be coming to an end. If he had not made that statement, it is possible the price would have crept up higher from 120 and perhaps towards 150. But as I said, this is educated guesswork because we have never been in this situation before.
So if Trump suddenly announces that the war is over, so do you think it will be safe for Hürmüz, for the tankers and, for the ships? Or could oil prices fall back to, again, $60 again?
Well, if Trump declares that the war is over, that assumes that that the United States and presumably Israel will not be making any more attacks on Iran, and one assumes that Iran will not be attacking its neighbors and not attacking US forces or Israeli forces. In other words, peace breaks out. If peace breaks out, one assumes that normal traffic through the Strait of Hormuz can resume. If that is the case, then all of the heat that we've seen in oil prices in this last couple of weeks, that heat will disappear. And therefore, the underlying fundamentals of the oil market, which we had before the crisis, will reassert themselves. And therefore, the price could come down relatively quickly, back down towards the $70 or so, maybe a little lower, that we saw before the crisis.
So if eventually oil prices fall again, has this spike already caused a lasting damage? What do you say?
Well, yes, because all around the world, people will be paying during this crisis, people will be paying more to obtain supplies of oil. I mean, the oil price has risen from $72 a barrel on the eve of the war right up to 120, fallen back a little bit now. So supplies are making their way into the market from other parts of the world, and that crude oil, higher priced crude oil, is being turned into products by refineries. Those products cost more money. Eventually, at the pump, the end user will be paying more for their oil products. So that is already going to have an impact, inevitably. But if peace does break out, then the prices do start to fall back again, then that pressure on the consumer will go into reverse. So, a short-term spike, but hopefully back to normal.
But according to your experience, which is over 40 years, what do you say? What do you expect realistically for oil markets?
Well, realistically, we are all at the mercy of waiting to see if there is a peace of some kind, and as a consequence of that peace, there is a reopening of the Strait of Hormuz. That is what we're waiting for. And there are two responses. Number one, there isn't a peace. There is no reopening of the strait. In that case, we would expect the countries that have been talking about releasing strategic stocks of oil, the G7 countries working with the International Energy Agency, we would expect to see a big release of stocks from them, possibly today, Tuesday, possibly Wednesday of this week. So let's wait and see if they do that. If, however, it is true that there is a peace and normal activity resumes, then we go back to the situation we had before the war. So, however, it is impossible to predict what will happen. It is hard to read President Trump's mind, and we are at the mercy of events.
So, how effective do you think the release of strategic reserves can, in terms of calming the markets?
Well, the figures that we've seen reported in the press are upwards of 300 million barrels, possibly 400 million, up to 500 million. If that is the decision that is taken, and the logistics of getting oil out of storage into the marketplace, once those, and the price of that oil, of course, as well, because it isn't given away by governments. Once that oil or that decision is taken to release the oil, then that will doubtless have a calming effect on the market. And it's impossible to say it will send oil prices down by $5 or $10 or whatever. It's not quite as mechanistic as that. But there is no doubt that were there to be an announcement of a big stock draw, then that would definitely help reassure the market that there is some more supply coming. But the problem with that is that if at the same time there is more tension in the Gulf and there is less likelihood of the Strait of Hormuz reopening, the stocks will only help you for a certain period of time. Because as I said earlier, between 50 to 20 million barrels of oil flows through the Strait of Hormuz every single day. You only have to divide 300 million barrels of a stock release by, say, 20 million barrels every day. And soon you're talking, what, 15 days, 20 days relief? So the stock release would be very helpful and very welcome, but it isn't really the answer.
Last question. What do you say on Turkey's position in this environment as a major energy importer?
Well, Turkey obviously is affected by rising prices. Clearly, that is the case for Turkey and many other energy consumers. And Turkey also, the geopolitical situation is very interesting because, of course, of the countries that Turkey borders, and there are implications for possibly refugee crises. There's obviously the issue which is not for me to discuss in depth, but obviously the issue of the Kurds in Iran. So for Turkey is in an interesting position because of its geography and its proximity to Iran and therefore to the conflict zone. So, I guess people in Turkey will, like everybody else, be hoping there's an early resolution to this conflict and that normal market conditions can resume, and then we can all get back to business as usual.
Neil Atkinson, thanks for joining our program.
Thank you very much.